We all know, but still pay insufficient attention to the frightening scenario of a comprehensive cyber attack, which would bring to a complete halt to the power supply, transportation, hospital services, our society as a whole.
BlackRock came out and they're trying to get an ETF into the market in Ethereum. I think you can see more and more of that. Let's go back to the case that was won by a company that is looking to and is launching an ETF. So again, I don't believe in the business use case or the consumer use case for crypto. Completely think it's non-existent.
You're just riding the momentum here towards an ETF, and that's it.
Exactly. I'm riding purely supply-demand characteristics, and that there are enough true believers out there. Again, I'm definitely not one. I'm on the other side that are continue to come into this asset class, because it is an asset class, and drive it higher. So that's why I'm there. That ride's going to go on for a while, so I would probably add to it again.
Okay. Josh, you still own some Bitcoin and Ether?
Yeah, we have Bitcoin, we have ETH, and we got out of all the other alt stuff like a long time ago. I'm with Steve. This is just about what other people are going to do. There's nothing fundamental going on here. Maybe someday, but it's 15 years and counting, and nothing yet. So that's the story.
Well, one thing to remember is that the United States has the ability to always print dollars. Europe does not. So in the European Union, you just can't print euros as a member country. That's why Greece had its back against the wall. They just couldn't print euros. That forced a restructuring to take place. Now, to be clear, the minute we start to print dollars to deal with the possibility of default, our economy is in a deep tailspin. So it's a theoretical possibility that we can go there, but the economic consequences would be devastating, an awakening taking place. But it's going to take time. It's going to take time. And nothing like mortgages at 7 and 8% to push the body politic to start to wake up to the consequences of the scale of the deficit we're currently running. You know, there's no doubt that a big part of the move in the 10-year this year has been driven by the realization we're in a full growth economy, full employment economy, and we're going to run almost a $2 trillion deficit this year. Like, in some sense, you're supposed to save in this moment in time for the rainy day, and yet we're spending at the government level like a drunken sailor. And the challenge with this is actually a variety of different challenges. Number one is, when you're spending too much on your credit card, like, you feel really good in the here and now, but in the back of your mind, there's that gnawing feeling that this isn't going to end well. And I think that's part of why the American consumer is just not as happy as you'd expect them to be. They're seeing the impact of inflation. They're seeing the impact of a dysfunctional set of regulatory policies. And they know in the back of their mind that we can't sustain this level of government spending. Like, the amount of economic malaise right now in America relative to where unemployment is, almost 10 million open jobs, is a stunning phenomenon. And I think the American people just understand deep down that something's not quite right.
Do you think the risk...
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel. Support this great content by hitting the Cash App and by joining the Patreon.
And we have CNBC playing the Hegelian dialectic. Steve Weiss says that he's investing in Bitcoin. We have Josh say he's investing in Bitcoin and Ethereum, but for no reason. Just because other people are investing, they're investing. Yes, guys, you heard that correct. And believe me, they know all about the digital transformation. They know the robots, algorithms, and drones are coming because they go over the stocks constantly. They're always talking about AI. They know the fourth industrial revolution is around the corner, but they make you indecisive. That's the key. They want you too scared to invest. And then we have Ken Griffin from hedge fund Citadel. says that the Fed can always print money. And we know that used to be the case. But now, since so many countries have plans to get off the dollar, the United States is about to lose that world reserve currency status. And we can see the proof of that in this long-term paper. Nobody wants it, but we know the plan. Remember, it moves in phases. Now the Fed only has to do is lower interest rates, tokenize the debt, and hand free money off to the people, turning the debt into equity. But we know first we have to have that crisis. Remember, the NWO caused the problem, wait for the reaction, and run in with the solution. And we already see the big banks and corporations getting ready for something big. We have cat bonds now for cybercrime. Yes, you heard that correct. Yes, guys, you can't make this stuff up. But we know the world that we're about to go to. They now can push a button, shut your water off, your lights off, your bank account off. And as soon as we get digital ID, they'll be able to turn you off. And when you enter into the metaverse, they'll be able to delete you. But we have some insurance companies that have left states completely. And we have been seeing infrastructure hacks time and time again. And the mainstream media is not constantly talking about it. They'll report it one time or you'll see one article and keep it moving. But if you do your research, we've had plenty of them. So we know something big is about to happen. And this week, guys, we have Xi in the house, and we see how they cleaned up San Francisco. Wonder where they put these homeless people at. That's what I want to know. But they cleaned it up fast, guys. That means it was all part of the plan. And then we have more drama this week with the shutdown looming. So guys, get your popcorn, sit back, let it play out. Remember what the crypto teacher tells you. Your life is an illusion and TV is your reality. And remember the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
So-called cat bonds, they've typically been built around natural disasters, and now we have them for cybercrime.
Yeah, it certainly looks that way. And there's been a surge in the popularity of these cat bonds due to the increase in all the natural disasters we've seen just in the past year. Now, with the surge in these cyber attacks, it looks like the hackers are able to hold multinational firms hostage. This can be difficult to insure. And so Bloomberg has learned that at least two firms now preparing to act on the opportunity. Beasley, which owns specialist insurers across Europe and the U.S., is said to be exploring a potential $100 million cyber cat bond. Access Capital is preparing to issue a $75 million cyber cat bond. And the wider market for cat bonds in general likely to reach a record $40 billion this year. That's a huge number. And again, a lot of that growth has been fueled by the impact of climate change. We've seen an onslaught, just almost unprecedented number of typhoons, hurricanes, floods, wildfires here in the U.S. and in Canada and in Greece and in Australia. Again, all of this believed to be due to global warming. And these extreme weather shocks are threatening to make the insurers' business models untenable. I mean, it almost breaks the model. And so for that reason, the insurance market has always offered these so-called catastrophe bonds. It allows the firms to farm out hard-to-insure risks to capital market investors, and in exchange, this is the key part, those investors get double-digit returns. So now that we're getting a storm of cyber attacks, as Paul mentioned, there's Boeing, ICBC, the Australian ports. These cyber cat bonds appear poised to move out of the shadows of private deal-making and into the public debt market, and they're coming out possibly, according to what Bloomberg sources are telling us, with some pretty major issuances.
I just love the term cyber cat bonds. Are they likely to be popular, given that, as you said, they're kind of moving more into the mainstream?
Well, when you look at the returns that we're talking about here, yes, they could potentially be wildly popular. Historically, investors are drawn to any kind of return that trounces those of U.S. Treasuries. And what you're looking at here is the Swiss Re Global Cat Bond Performance Index. It's up roughly 18% year to date. And it's an index that tracks the aggregate performance of cat bonds bonds in the U.S., European, and Japanese currencies. So pretty strong performance. Compare that to the return of the Bloomberg U.S. Treasury Index, which is actually down about 1% year to date. So there's really no comparison. And issuers of cybercat bonds want to protect themselves from financial losses that can follow a major cyber attack, and that includes lost revenue, legal fees, regulatory fines. But it is a new frontier. One hedge fund portfolio manager who invests in cat bonds says there's a lot of data in what returns are in insuring against hurricanes and other natural disasters. There's not a lot of data when it comes to cyber risk. It's much more difficult to price. Still, many investors appear interested in getting exposure to
keep the government. Medicare checks will still go out. New House Speaker Mike Johnson now pushing an untested plan to keep the government open with a two-step approach. The first would fund some parts of the government until January, the second funding the rest until February. But notably absent from the plan, military aid to Israel and spending cuts. Johnson can only afford to lose 4 votes, and right now, at least 3 House Republicans publicly oppose his plan. The new speaker trying to convince hardline holdouts of the urgency felt by some members of his caucus.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leverage to technology, and I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust. And we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets. Now,
it was not just a poor auction. It was absolutely lousy, and you know, when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books, It's Time to Re-Educate. Also, if new to cryptos, Coinbase, Bitrue, Binance, do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Joshua and Drama Team save New York from COVID Stories 3. Part 3. King Joshua and Drama Team goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.